So make sure you talk to your lender and get that loan estimate within 3 days of your mortgage application so that you can assess what your closing costs may be and ask your lender any questions that you may have about the different fees they put on there. Hey you guys, welcome back to my channel. Thank you so much for joining me once again for some more real estate content. So today we're going to be talking all about closing costs, who pays them, and what are they even for? What do they include? What is the purpose of these fees? You guys chose this topic on Instagram. I did a poll the other day that was choosing between this topic and another one that I had on there. And if you're not following me on Instagram yet, you definitely should. I post a lot of real estate content on there. It all connects back to my YouTube. So definitely follow me on there if you're not already. But you guys voted for this topic more so than the other one, so we're going to be talking all about closing costs, and hopefully I can answer this question for you, clarify a little bit why you're having to pay these costs at closing. So starting off with the definition of closing costs are just fees and expenses that you pay when you close on a house. This is apart from your down payment. So when you're purchasing a home with a mortgage loan, you are usually having to put a down payment unless you are a VA buyer. We talked about that in a video, I think a few videos ago. I'm going to link it up here. Unless you're a VA buyer or you have some sort of special circumstance, you're usually having to put a down payment on a house, and your closing costs are separate from that. So when you're a buyer, you have to prepare yourself for both a down payment and the cost of closing costs. Buyers are typically the ones that are paying the closing costs. You can negotiate for the seller to pay either a portion of the closing costs, or if you're lucky, you can even ask them to pay for all of your closing costs. But usually that doesn't really work in a competitive market. So the market that we have right now, where we have few sellers and lots of buyers, there's a ton of demand. So all the houses, most of the homes that are priced right, are getting tons of offers. So usually when a seller is in that position where they have a lot of offers to choose from, they're usually not going to go for the offer that's asking the seller to pay closing costs, whether it's partially or completely. They know that they can get a better offer from somebody else. They know that they can get an offer that doesn't require them to pay closing costs. So usually it's tough to ask for that when you're in a competitive market, but in a normal and healthy market, it's totally okay for you as the buyer to ask the seller to pay a portion or even all of your closing costs. So in this video, we're going to be talking about the various fees that go into your closing costs. There are some fees that most people have to pay at the time of closing, and then there are some fees that are very specific to the type of home you're buying, the location you're in, the bank or credit union that's giving you the loan. Closing costs are very, very specific to your purchase. So I'm going to give you just a brief overview, but absolutely talk to your lender, because again, I'm not a lender, I'm a real estate agent. So I always recommend that you talk to your lender of your specific bank or credit union so that you can get the best and most accurate information for your type of loan. Alright, so we've got 11 categories of fees that we're going to briefly go over in this video just to give you an idea of what you're paying for and why at the time of closing. In this video, we're going to be referring to an amazing article by the Bank of America. It's titled, "What Are Closing Costs?" It's a really great article. I'm going to be referencing it. And every article that I used while I was researching this topic is going to be linked in the description down below, as always. So if you want to go and do some further research on your own, I highly encourage you to do so. All the links will be in the description box down below. The first fee we've got on our list is the application fee. This is a fee that your mortgage lender will charge you just to process your mortgage application. As far as I know, most banks and credit unions charge a fee like this that you're going to have to pay for at closing, but absolutely talk to your lender, because again, every lender is different. So your lender may not charge an application fee. It's really important to shop around for different lenders when you're looking to finance a home purchase, because not all lenders are created equally. Every lender has different types of fees, but this is the first fee on our list of 11 fees. The second fee is the loan origination fee. This is the fee that your lender charges you for processing and underwriting your loan. Underwriting is a part of the loan approval process where your lender checks if you're in a good financial position and you're going to be able to repay that loan. Lots of different factors go into this analysis. One of these factors is, of course, checking your credit score. They do look at your credit score. We talked a lot about this in the previous video, so I highly recommend that you check that out. But this whole underwriting loan approval process is just them making sure that they feel comfortable with your financial position and that they feel like you're going to be able to repay that loan. And again, this fee depends on your lender. It is not a uniform cost across the board, so you want to make sure that you're shopping around for lenders and asking them what their loan origination fees are so that you can go with the lender whose fees make the most sense to you. The third cost is appraisal and survey fees. An appraisal and/or a survey is used to confirm the market value of your home. So when you're working with a realtor as a seller or a buyer, they will often conduct a comparative market analysis. So if you're selling your house, a realtor will conduct the CMA in order to be able to tell you what your house is likely worth. They do this by looking at similar homes in your area that have the same amount of bedrooms and bathrooms and have a similar lot size to yours. And they look at those houses either that are active on the market, or more often they look at houses that have recently sold, because that is the best indicator of market value, what people are willing to pay for houses. So they'll use all of these comparative homes and they will conduct a report for you, and based on all of this research, they'll tell you, I think your house is worth this much. But a realtor is not an appraiser, so they can give you an estimate of what they think your house is worth, and it's usually a very accurate estimate depending on the market that you're in and how many comparables there are available. But you still need to make sure that you get an appraisal, especially if you're financing the purchase with a loan. A CMA that a realtor provides is an educated and well-researched opinion on the value of your home, and the appraisal is the actual market value of your home as determined by a licensed appraiser. And so you're going to have to pay the cost for that appraisal and or the survey to confirm the market value of your home. The fee for your appraisal also depends on your lender, but it's usually several hundreds of dollars. The fourth cost that goes into your closing costs is title insurance. Now, title is just a legal way of saying that you own a right to something. So when talking about real estate or a home purchase, title is just the thing that describes your right to ownership of the property, your right to use it and enjoy it. So title insurance then is just a policy that protects against your ownership of the house in case there are any issues that arise during the course of your ownership. It protects you from financial loss or legal expenses that could occur as a result of filing errors, forgeries, undisclosed heirs, or impersonation of the true owners of the land by fraudulent people. So if anybody comes out of the woodworks and is trying to claim ownership to your property while you own your property, title insurance protects you against that. A title company will search the records for your home in order to try and catch some of these issues early on, but they're not going to be able to catch all of these different problems that could arise during the course of your ownership of the home. So after they run this record search on your house, they run a title search, they will provide you with a title insurance policy that is specific to you that will protect you from any ownership problems that may arise while you are living in your home. This is a one-time cost and it is paid at closing. The fifth cost is homeowner's insurance, and this is a policy that is designed to protect you from anything that happens to your actual property. It protects you against losses or damages or even injury that happens to yourself or to other people while they're on your property. This policy usually covers interior or exterior damage, loss or damage of personal assets, or again, injuries that occur on your property. The first year of this insurance is usually paid at closing. The sixth cost is private mortgage insurance, or PMI, and this is only applicable if you're making a down payment that's less than 20%. If you're making that smaller down payment, the bank automatically considers you a riskier buyer, so the PMI is just there to protect the lender in case you stop making your payments. The seventh cost is mortgage or discount points. This is a fee that you pay your lender if you want to reduce the interest rate on your mortgage. It's definitely not required of a buyer to do this, but sometimes buyers will want to pay down that interest rate by paying more upfront, so that is definitely an option for you. It just means that you're going to have to pay a little bit more at closing. The eighth cost is property taxes, and your property taxes really depend on your home. If you've got a huge expensive house with a lot of land, that means you're going to be paying more property taxes than a person with a smaller house and less land. The first 6 months of your property taxes are usually due at closing. The ninth cost is the closing or escrow fee, and this goes directly to the escrow agent that helps you out during closing. This fee depends on the purchase price of your home. An escrow agent is a neutral third party that holds money, documents, and instructions until a transaction closes. So once it closes, the escrow agent will disperse all of that money to the proper people. You cannot close without an escrow agent, so this is definitely a fee that you should be prepared for. The 10th cost is attorney fees, and of course, if you did not use an attorney during your home buying process, you won't owe this fee, but if you did for any reason, you will have to pay a fee. The 11th category is miscellaneous fees. Most of these are just specific to the location that your house is in, the type of house that you have. So I put them in this category together because not everybody is going to be responsible for these fees. We'll try to go over these really quickly. So the first fee in this category of miscellaneous fees is a courier fee. This is just something that you pay if you can't actually make it out to the office to sign all the final papers and documents. If you have to have a person come out to you, if you're out of the area and you're just unable to make the commute, then the courier will come to you and you will sign the documents, but you do have to pay an extra fee for that convenience. The next fee is a credit report fee, and this is a charge. It's from $15 to $30 from a lender to pull your credit reports from the 3 main credit reporting bureaus. Some lenders may not charge this fee because they get a discount from the credit reporting agencies. The next cost is an FHA mortgage insurance premium. We talked about FHA loans in one of my previous videos. I'm going to link it up here so that you can refer to it if you'd like to. But essentially, if you're financing your home purchase through an FHA loan, you're going to have to pay an upfront mortgage insurance premium of 1.75% of the base loan amount. This is usually paid at closing, or it can be rolled into your mortgage. Again, you're going to have your annual mortgage insurance premium as well, but it's important to note that if you are financing your home purchase through an FHA loan, there will be an extra premium at the time of closing. The next cost is a flood determination and monitoring fee. So if your home is said to be in a flood zone, this is an extra cost that you have to pay because this will require flood insurance. This also pays for the ongoing observation to monitor any changes that may occur in that flood zone. The next cost is an HOA transfer fee. So if you're purchasing a condo or a townhome, you are going to be part of a homeowners association, and that means that you're going to have certain dues every single month. That cost covers for different amenities. Every townhome and condo complex is different, but when you're purchasing a condo or townhome, during the time of closing, you're going to have to pay for those HOA transfer fees in order to have that HOA transferred from the previous owner to you. There's a lot to consider with an HOA, and again, this is only applicable if you're purchasing a condo or a townhome. So if you're purchasing an actual house, you don't have to worry about this, but I'd love to make a video in the future outlining what an HOA is, why you have to pay dues, what amenities different HOAs cover. So if that's something that you're interested in, let me know in the comments down below. The next potential cost is a lead-based paint inspection, and a title company will only require this if your home was built before 1978. Some states also require a pest inspection, so this might be another cost that you have to consider depending on what state you live in when factoring all of your different closing costs. Another cost is prepaid daily interest charges, and this is a payment to cover any interest on your mortgage that will accrue from the date of closing until the date of your first mortgage payment. The final cost in this miscellaneous section is recording fees, and this may be charged by your local recording office, whether that's your city or county, in order to record your public land records. Alright you guys, so that's all the different fees that could go into your closing costs. Again, a lot of these are really specific to where you're purchasing your home. State, location is really important. What type of home you're purchasing, what type of loan you have, which lender you're going with. It's very specific to all those different things. So you might have certain costs that another person won't have depending on where you're purchasing your home. So it's really important to talk to your lender, have them explain to you what fees specifically are going into your closing costs, because it is really different depending on, again, where you're purchasing your home. When you submit a mortgage application, your lender is required by law to give you a loan estimate within 3 days. This loan estimate will outline what costs you should be prepared for, and you really want to make sure you have this so that you're not caught with any surprises when you're closing on your home. When you get a final closing disclosure of all the different costs that you're going to have to pay, compare that to your loan estimate. And if anything isn't adding up or isn't making sense, make sure that you ask your lender. I want to finish off this video with some really interesting stats from an article by Investopedia that talks about the average closing costs in America and average closing costs depending on the state that you live in. So home buyers in the US pay on average $5,749 for closing costs. This is according to a 2019 survey from Closing Core, which is a data firm that specializes in closing costs. This survey found the highest average closing costs in parts of the Northeast, including the District of Columbia, which averages at $25,800, which is just absolutely insane. Delaware, which is at $13,273. New York, which is at $12,847. Maryland at $11,876, and Pennsylvania at $10,076. Washington is the only state outside of the Northeast to fall among the highest closing costs, which is at $12,406. The states with the lowest average closing costs included Indiana at $1,909, Missouri at $2,063, South Dakota at $2,159, Iowa at $1,194, and Kentucky at $2,276. So again, this just really illustrates that your closing costs are dependent on so many different factors, one of them being what state you live in. So make sure you talk to your lender and get that loan estimate within 3 days of your mortgage application so that you can assess what your closing costs may be and ask your lender any questions that you may have about the different fees they put on there. Alright you guys, thank you so much for watching. I really appreciate you spending your time with me today. If you found this video helpful or beneficial in any way, please make sure to like and subscribe. I post a new video every Thursday, and turn on the bell notification so that you get notified every time I upload. Follow me on Instagram, which is @ArenaD, and on TikTok, which is @ArenaDPDXRealty. I post a lot of real estate content on there, and it oftentimes ties back to my YouTube channel, so if you want to be a part of my journey, definitely follow me on there. Alright you guys, thanks again for watching, and I'll see you next week. Bye!